This is Gerardo Del Real with Resource Stock Digest. Joining me today is the CEO of IsoEnergy, Mr. Phil Williams. Phil, it's great to have you on. How are you today, sir?
Yeah, I'm doing really well, Gerardo. Thanks for having us on. Great to talk to you again.
No, listen, I want to talk ISO. I want to talk about the recently completed $23 million bought deal private placement. The company has cashed up at a perfect time with uranium, seemingly surging higher and higher by the week with no end in sight. But before we get into ISO specifically, I have to get your take on the uranium space and kind of where you think we are in this cycle.
Yeah, look, I mean, it still feels pretty early on, notwithstanding how fast and how far the price has come just in a short period of time. But the dynamics, whether you look at the demand side and everything we're seeing about new reactor builds, extensions, and SMRs, is pointing to a bright future on that side. And supply, where we've seen it come out of Kazatomprom and a little bit out of Cameco, and then just more generally, uranium mines are hard to bring on time, on budget, at the rates that people expect. So I think we're going to be in a very tight position in this market for the next couple of years for sure, and that's going to only mean good things for uranium prices and uranium equities.
Well, I couldn't agree with you more. I talked about the $23 million bought deal. I'm pretty sure that you could have had, twice the amount had you wanted to take it. Tell me about being cashed up in this market and how you plan on allocating that. 2024 obviously is going to be a pretty pivotal year for the company.
Yeah, look, and so you're absolutely right. We had a lot of demand for that financing, and that financing was done at a premium to our share price at 625 versus the underlying price that was in the mid fours at the time, because we raised what's known as flow-through shares, which is specific money designed and has to go towards Canadian exploration expenditures. So that's where that money's going, with a big chunk of that budget this year, and then we're funding us into next year as well. And the demand was very, very strong, and I think what your investors or what your listeners might be interested in is just the complexion of the buyers that we're seeing. There's more and more names. It's not the same people that had been investing in the company over the last few years when uranium wasn't quite as interesting. It's new investors, all looking for bigger companies to back and writing big checks. And yeah, as you say, we could have taken a lot more money. Now our balance sheet is very, very strong. So we've got over $80 million between cash and securities. We do own shares in a number of different companies, so we're really well funded for this year and many years to come, quite frankly.
Let's talk specific catalysts. What do you have on the horizon, Phil?
Yeah, so we've got kind of two prongs of catalysts, and the first one is the Canadian exploration program. So they're going in earnest. We've got 2 rigs right now at our Hawk project. I think they've finished 2 holes, third hole going in, and a couple more holes planned there. We're going to move one of the rigs up to Hurricane in the next week or two and start drilling there. Hurricane, of course, is the highest grade resource in the uranium space, and we're very excited to drill new targets that we have along strike to the east of the current resource, where we have some really, really interesting targets that look like they could be additional positive mineralization. And I think it would be remiss not to mention the update that Cameco had the other day when they put out their financials. They started talking about their side of the border. So our resource is bifurcated by a border, and on the west side of the border is the Cameco Dawn Lake project. And they put out, for the first time really in the public domain, some very exciting information about that project. They're in their MD&A. They said they've hit mineralized intercepts in excess of 60% U3O8 over several meters, and they're going back in this winter, and they're drilling right across the border with a aggressive program. So there's a lot of work happening in that part of the world, and I think it speaks volumes to what potential they see. Obviously, we know the potential on our side, but together this is looking like a very formidable resource corridor, and yeah, we're excited to get in there drilling in the next few weeks.
Well, I'm excited to see what you're able to turn up. You mentioned having a multi-pronged approach. You obviously have the cash and the technical acumen to execute on that. Anything else that you'd like to add to that, Phil?
Yeah, look, the other part of the catalyst will be in the United States. So for listeners that aren't as familiar with that side of the portfolio, we have a number of past producing mines in southeastern Utah that we're going to be aggressively moving back towards production. These are mines that were in production in the last bull market, put on care and maintenance, but all the infrastructure is there. They're fully built projects. The permits are all in place. We're going to announce a comprehensive work program in the next couple of weeks to explain to people how we're going from where we are today to a production ready position. And really, with prices where they are and where they could go, these projects could generate significant cash flow to help fund the work in the rest of the portfolio. So we're excited. We'll be excited to say more about that in the next couple of weeks. I'd love to come back and walk you through that in more detail.
Exciting times. Absolutely. Would love to have you back on. Looking forward to it. Thanks again, Phil.
Thanks, Gerardo.
Hey everybody, Gerardo Del Real here. If you're enjoying the content that you just saw, you can let us know in 3 simple steps. Hit the like button, hit the subscribe button, and please share across your network and on social media. Take care, everybody.